What's up, guys? This is Ty Zen again, currency analyst for prisonorfreedom.com. It's a freedom blog where we talk about the tools, the techniques, the strategies, and the technologies that allow us to find freedom in health, wealth, and relationships. And in this episode of currency analysis, I'm going to talk about the wealth aspect, especially when it comes to currencies. And in this specific video, I'm going to talk about how to estimate Bitcoin's price velocity using ATR. In today's objective, we are going to cover what is the average true range, often abbreviated as ATR, and we will also talk about what is the difference between ADR versus ATR. And ADR stands for average daily range, and these two indicators are commonly used and they are commonly interchangeable, and there's only a slight difference between the two, and I will explain that in a minute. And then we will also cover how to use Bitcoin's ATR to measure volatility, how to use Bitcoin's ATR to set stop losses, and how to use Bitcoin's ATR to measure time and distance for a price projection or estimation. And then lastly, I will go over what is the ideal ATR setting. Okay, so let's go ahead and get started here. Once again, excuse me, I will use tradingview.com as my analysis platform here. The reason why I'm doing this ATR or average true range video is, if you'll look here in the comments, I was commenting and updating everyone on one of the example trades that I posted yesterday on how to manage a trade. And over here, let me see here. Antheon X asked me, how do you use the ATR indicator in your last chart? And I'm sure the reason why he's asking me this is I state over and over that I do not use indicators in my trading. And so when he noticed that I have one indicator here at the bottom of my chart, I think that's probably what prompted him to ask how I'm using it. So this video is for Antheon X and the other folks that see me using the ATR. Okay, and I think that also let me see here, there was also another person, up here, Live and Learn here. He's also wants to know how I'm using the ATR. Okay, so let's go ahead and get started here. I made a bullet point list here so I don't forget what to talk about. Okay, so the first thing is what is the average true range? Okay, so I'm going to go to this chart here. The average true range, I'm pulling up Facebook here as an example because it has the qualities. It's not a 24-hour market like Bitcoin is, so it's a lot easier to explain ATR and ADR. ATR is the when it says average true range, okay? The average true range is how much it moves in that day, okay? So in this particular case, yesterday, the average true range, see how it says 62.44? That was the high of the day yesterday. And then I'm looking at this red candle, by the way. And then if we measure the bottom, it's like 60.40. I'm sure if you zoom in, you can get a more accurate look at it. Let me go ahead and do that right now so you guys can see what I'm talking about. Okay, on this daily chart here, the bottom is 60.44 and the top is like 244 or 42, somewhere around there. It's almost like $2 range. So it's safe to say that Facebook moved close to $2 yesterday. So that would be considered the average daily range because that's how much it moves in one day. So ADR is average daily range. So if we measure the very low of the candle to the very top of the candle, excuse me, we have about a $2 range. So that would constitute the average daily range. Now the average true range is a little bit different. It measures from the time that it opened. Okay, so the price closed down here yesterday, and then it gapped up all the way up to here, and then it opened here, and then it closed here at the bottom of the candle body, right? So the average true range is slightly different from the average daily range because it takes that gap into account. So you have a gap here, over here you have a gap over here you have a gap here. So average true range takes account that there is a gap, and it calculates the total range that the price moved during that day or during that time period. Okay, so ADR is used to measure usually the daily range of a stock, a Bitcoin, or a currency, or a futures market, or anything like that. ATR is used more on measuring the candles. Okay, so you can use a 7-period. The way that's usually expressed is a 7-period ATR, whereas the ADR would be expressed as a 7-day ADR. Okay, because it's usually measured in daily ranges. If you switch to like a 60-minute candle right here, of course the ADR will also measure the period, the 7 period, but usually it's used to measure the daily range, okay, not the intraday candles like the 60-minute or the 180 minutes or the 240 minutes. Okay, that's why you'll notice that on a 60-minute range here, the range is almost the same. It's 76-cent range and 75-cent range here, meaning that if you add up the distance that price moved in the last 7 candles and divide it by 7, you'll get about 75-cent move. And then if you take up here on the average true range, if you take the distance that price moved from the high to the low in the last 7 candles and divide it by 7, you will get a 76-cent range. So it's not that far off. But when we change it to the daily range, you'll notice the daily candles here, there's a significant difference in price. Okay, on the ADR, it still indicates that Facebook moves an average of 75 cents a day, whereas on the 7-period average true range, it indicates that Facebook moves an average of $3 per candle, not per day, but per candle. Okay, so that's the difference. Again, ADR is average daily range, and it only measures the top, the high, and the low of the candle distance, whereas ATR, the average true range, includes the gaps in price. Okay, so I hope that kind of answers what is the average true range and what is the difference between the average daily range versus the average true range. I normally use the average true range in trading myself. Okay, so let's go ahead and take a look at how I use the ATR to trade Bitcoins. Let's talk about how to use Bitcoin's ATR to measure volatility. Okay, so let's go ahead and do that. So if we go over here to, by the way, I've been asked to use other exchanges other than just Mt. Gox. So I'm going to go ahead and use the BTCE exchange here. Okay, so if we look at, first of all, when I look at ATR, I always look at the daily range first. Okay, so I look at the last the ATR here, and let's magnify this so that we can see what I'm talking about. Now, if you will notice, whenever we talk about the ATR, the way that I use ATR is the same way that a cardiologist would use the heartbeats per minute. Okay, so for example, I normally have a, let me pull this up as an example here. My handy dandy notepad here. So let's make it 20 point here. So my normal heart rate, okay, let's say that my normal heart rate equals 78 beats per minute. Now, if you know that my heart beats 78 times per minute, if I were to tell you that my heart rate is now at 140 beats per minute, right? That would let you know that I have a high heart rate. Okay, if I were in a lying position and I'm not moving around, my heart rate, excuse me, would slow down to around 72 beats per minute, and you would know automatically that I have a low heart rate. Now, some of you guys that have been following me for a while, you know that I've had multiple heart attacks before. The first one I had was back in 2007, and it was a very, very massive heart attack, and I did not know that it was a heart attack at that time. So I did not know, so I pulled to the side of the road and I just laid there, and I suffered the heart attack for about an hour before my work boss came and picked me up and took me to the emergency room to be saved, okay? And when I got to the ER at the hospital, that I noticed that when I looked up the heart rate monitor, it indicated that my heart rate was at 195 beats per minute, all the way to as low as 20. I think that was the lowest number that I saw, beats per minute. Now, we know that the normal heart rate for me is this right here, is 72. So when I saw that it was 195, and even during the most intensive exercises that I've ever done in my life as a athletic trainer, the highest I've gotten was like 180 or 185 for a very brief moment. Matter of fact, as soon as I stopped the exercise, my heart rate would drop very quickly, okay, because I had a very efficient heart. However, when I saw that my heart rate was at 195 beats per minute, it was very scary because I knew that that is not a normal heart rate for me. I knew that from over, a decade worth of training people and training myself at the gym. I knew that that was not a healthy heart rate. And what made it even more scary was that my heart was jumping from 195 beats per minute down to 20 beats per minute within like a 5 to 10 second span. And I know from years of exercise that that is not possible and that's not healthy. Maybe I shouldn't say it's not possible, but that is not healthy for a normal male at 36, 37 years old to have his heart rate jump from 195 beats per minute 1 second, and then 5 seconds later it's beating at 20 beats per minute, okay? So the only way that we know that the doctor knew that there was something wrong with my heart, one of the ways anyway, was to look at my normal heart rate, which was at 78 right here, and see that this is a low number and this is an extremely high number. So we're at either ends of the extremes, okay? So that's what the heart rate measures. Likewise, when we talk about the ATR, okay, we can measure and tell that the ATR is healthy or not healthy, okay? So if we look over here at the range, now that we have a number in mind, we know that when the price ran up to 1240 and set new highs here, the average true range was, if you'll look over here to the gray box right here, you'll see it. And let me just expand this window a little bit so that your eyes will focus on here. If you'll notice that during the run up to 1240, you'll notice that we reached a high of $180 per candle, meaning that if you took the average of these candles, of 7 candles at a time, during this period right about here, you'll notice that the average of the last 7 candles, the distance it traveled was $180. Then it narrowed down to about $100 in this area right here, the average of these 7 candles, and then it reached a peak of $204 right around here, the average of these 7 candles in this area here. And likewise, the average of the 7 candles here was around $158 in this area right here. Okay, so keep in mind that ATR is a lagging indicator. However, it gives us a good perspective on the velocity and what's the normal healthy heartbeat or the heart rate of the price movement of Bitcoin. So right now, we notice that price ran up. In the past, as you can see here, you'll notice that the price movement of Bitcoin was before the huge run up. If we put a line right here, you'll notice that it was around $10 a candle. So to go from $10 a candle in October, the beginning of October, all the way up to around $150 to $200 in the middle of November to the middle of December, that is a huge run up. That's like saying that my heart rate went from 78 to 195. It's near the extremes is what I'm saying. So now, if we look back here to the current time, we will notice that the heart rate or the ATR of Bitcoin is now right around $58, $60, you can say, to the low of right here, which is around $34. So the price or the heart rate of Bitcoin right now floats between anywhere between $34 to $60. Okay, so how does that help us? How does that help us? Okay, well, first of all, the first thing that it does is it helps us measure volatility. So if we look at the price of Bitcoin right now, we can say that it was less volatile than it was during the last half of October and November and December. Okay, so we can see that through the shape and the size of the candles, but it's a lot faster if you just look down here and see that Bitcoin had around $150 to $200 price range each day, and now it's down to $34 to $60. Okay, so that's how you measure the volatility. Now, if price was to jump up to like $100 or $200 per candle again within the next few weeks or few months, then we would know that Bitcoin is becoming very volatile right now. Okay, so let's take a look at this next bullet point here. How do we use the Bitcoin's ATR to set stop losses? All right, let me go ahead and switch back to the, or no, you know what? I'll just stay with this. Let's just switch to a 60-minute candle here, and let's see. Let's just say that if you were to zoom in right here and you were to execute a trade right here. What I do is I normally pull the ATR down very low here because all I need to see is the number over here. I really don't need to see the entire chart. If you're a beginner and you want to get your eyes used to it, you're welcome to expand this ATR window a little bit bigger so that your eyes can clearly see it. But what I do is that when I trade Bitcoin, I normally have it on the 1 day, and I just take a quick glance at it, and each day or each week, at the beginning of the week, and then I just compress it like that so it does not get in the way. And after that, I can see this 52, and I know that that it's at a low volatility right now. So let's go ahead and switch to the 1 hour chart. Let's just say that you saw this sideways movement. Okay, this is just an example right here, guys. It's not anything spectacular. Let's just say that this was the entry for a long trade right here because the market is going sideways. And let's say that you want to set a stop loss. I like to color code red as my exit, and then I will clone this line again and put it up here as my target profit. And in this case, I'll just use purple, just so your eyes can tell the difference between the two. I always like to take trades that are at least a 2-to-1 or a 3-to-1 risk to reward, which means that for every dollar that I risk, I want to make sure that there's a potential $2 to $3 gain. All right. So let's say that we decide to make this trade. Okay. I'm going to zoom out to here so it's more closer to reality. All right. Let's say that I decide that I want to take profits there. And by the way, the overall long-term trend is up. So even though we are in a sideways market, I call this a sideways market, guys, because let me just briefly explain this so that you guys understand. When the trend is at a 30 degrees or more, like this, when we have a clear uptrend like that, I consider that a trend. When we have a clear downtrend like this, I consider that a trend. Okay. This to me is not a trend. It's just a tilted sideways action. Okay. This is not a trend, folks. I know a lot of people see this and they think that it's a downtrend, but let me just delete this and start all over. lot of people see this and they see this as a downtrend. I do not see this as a downtrend at all. I see this as just a tilted sideways market. All right, so let me go ahead and draw that. Okay, so in this tilted sideways market, first of all, I would not go against the long-term trend. In other words, we are in a daily uptrend. So if I take a short here and take it down to here, well, that's what's called bucking the trend or fading the trend or going against the trend. And in my trading style, I do not do that. Okay, I do not go against the long-term daily trend. If you do that, you are welcome to do so, but I am not going to do it. Okay, so let's take a look at how I would use the ATR to set up this trade. Now, if you've been following me for a while now, you know that I do not like to chase trades, meaning that I set my trades up in advance. I do not chase a trade. I do not wait for price to start running up and then I start panicking and chasing after a trade. Okay, so there is my sideways market right there. And you know, for the purpose of this presentation, I'm just rushing through it, guys. So right there. So I'm drawing my sideways market where it's hitting those majority hits rule that I use to draw my trend lines. Okay, so right there. All right, so now I would look to go long when price reached somewhere down here. When it comes back down to here somewhere, I would look to go long, right? And my stop loss would be below the low of this big drop right here. So if I look at that, right, I would raise my profit target to somewhere about right there. Okay, so that ideally it's more realistic. Okay, so if I take this tool over here, this long short, this risk management tool, you will notice that first of all, you place this on the entry, which is right there, and then you'll notice that if I pull this up and expand this chart a little bit, you guys will see what I'm talking about here. You will see that there's my profit target and there's my projected stop loss. Okay, and let's just move this so that you guys can see it better by expanding it. Okay, so right about there. Okay, so you guys can zoom in and make it more perfect on your own charts. I don't want to spend too long on this. Okay, so there's my risk right there. My risk to reward is that 4.8. That means that for every dollar that I risk, there's a potential $4.8 of potential gain for every dollar of potential risk. All right, so now if I look at the size of this stop loss, it's 16.17, the distance from this green line to this red line. And if we double check over here, if you add $16 on top of this 15, it should come out to 31. Okay, so I know that that's the size of my stop loss, right? Now if I expand this ATR window down here, it will notice that it's at 4.1, meaning that, or you can look at the number over here, it's about $4. That means that you can expect the price of Bitcoin to move about $4 every hour. So we're looking at the hourly charts, and it indicates that in the last 7 candles or 7 periods, if we add up the total high and low distance that the price of Bitcoin moved and we divide it by 7, we get 4.1. Okay, I just ran it off to $4, right? So that means that if we enter along here at the green line and we set our stop loss $16 away from the entry, we have a very good shot at not being shaken out. So let's say that if I were to move my stop loss to below the low of this low, okay, then what happens is my stop loss is now, let's say that for explanatory purposes, I move it to below the low of this, okay, and let's just expand this some more so you guys can see it. And let's say that I put it right here. Now you'll notice that the stop is now $2.8 away from the entry. So if the vibration or the frequency of Bitcoin moves $4 an hour, then there's a very high risk. See how price of Bitcoin vibrates as it goes up? Well, there's a very high chance that the vibration will shake me out of this trade long before I even have a chance for the trade to develop and move in my favor, right? So this right here lets me know that the stop loss is way too tight. Why? Because in my opinion and my personal experience, this $2.8 stop loss is smaller than the hourly ATR for Bitcoin. And so there's a very, very high possibility that if Bitcoin was close down to here, when I get ready to go long, it will shake me out long before I get a chance for price to shoot back up. Okay, so because of that, the way that we use ATR to set our stop losses is to right here, where we use ATR to set the stop losses. We want to make sure that our stop loss, no matter what time frame that we use, to be just slightly bigger than the actual ATR. So if I move my stop loss to below the low of this low right here, and we come over here and we move it to here, then what happens is that $14 stop loss is about, I would say, almost 5 times, right? About 4, almost 4 times greater than the ATR here, the hourly ATR for Bitcoin, which means that the probability that I will get shaken out of my stop losses is a lot less, okay? Because I'm operating within the parameters of this trading instrument called Bitcoin. If I was to go to, let's say, go back to Facebook, and I was setting my stop losses on a intraday 1 hour, right? Then I would want to do it so that the ATR is just slightly greater than 76 cents. Now, the percentage stop loss or the size of your stop loss will vary among each trader. The strategy that I explain here to manage your stop losses is fairly the same, but how it's being used is going to be slightly different. Okay, so just be aware of that. Okay, so that's how the ATR is being used to manage your stop losses. The next thing that I want to talk about is how to measure time and distance for price projections. Okay, so let's say that I wanted to project how long it will take for price to reach from here down to here to hit my entry target for a long. So if price is up here right now, let's say that it comes up to here, bounces off of this sideways, tilted sideways market, and then it starts to come down. Because the distance between the top of this channel, right? Let's go ahead and use this measuring tool here. Price range. If we just grab that and go to the bottom here, it says that it's about $79 range, that price range. So if we take our trusty old calculator here, because I'm not one of those Asians that's very good at math, if we take $79 and we divide that by an average true range of $4, we get 19 candles or 19 periods. We can round it off to 20. It does not have to be perfect, okay? As long as we get a good estimation. So we know that within the next 20 candles, if it were to come down to here to our entry for a long, it would take at least a good estimate is 20 candles. Now you might say, well, Ty, what if it gets there in 2 candles, or what if it gets there in 200 candles? Well, it doesn't matter. What matters is that you have an educated guess based on past performance of this Bitcoin, okay? You're not just pulling it out of your butt out of nowhere and trying to figure out how long it takes to get there, okay? So that's how you would use to measure time, okay? Now, another thing that you can use, all right, is if you were doing a price projection. When it comes down to here, you can look at how long it takes to get back up to here. And if we know that it takes 20 candles, because each candle moves $4, an average of $4, then you can pretty much reverse the math and figure it out. Now, the last thing that I want to talk about, so that we can end this video, because it's getting to be a little bit longer than I wanted to, is what is the ideal ATR setting? Okay, so now that we know how to use ATR to measure volatility and time and distance and set stop losses, what is the correct setting? There is no correct setting. All right, you click on this gear right here, and the length of this ATR is 7. Now, traditionally, before computers were invented and there was electronic trading, traditionally, old school method was to use a 14 period ATR or ADR, either one. 14-day, 14 period was the standard. All right. This is the reason why most platforms that you set up an account with, they just have it defaulted to 14. Now, my trading mentor, who is a very, very savvy day trader, he recommends that if you are day trading, meaning that you are opening a position and closing it within the same day, you trade intraday, then he recommends using a 5-period ATR, right? Now, whether you use a 7-period or a 5-period for day trading or a 14-period, that's up to you, okay? Since I take more of a swing trade and a more swing and position type trading with Bitcoin, then I'm just going to stick with the traditional 14. If it's 7, it's not going to hurt me, okay? This just gives you a ballpark figure. Whether you're off a little bit or not, it's not going to kill you, okay? So hopefully this video has been helpful, and this answers Antheon X. I don't know if he's still on here or not, but I hope that this answers Antheon X and Live and Learn's concerns and questions about how to use ATR, okay, and how to use the Bitcoin ATR to measure volatility, to set stop losses, and measure time and distance for a price projection, and what's the ideal settings for ATR, all right? If you have any questions, comments, you can leave the feedback under my YouTube video or in the comment section of my Freedom blog at prisonorfreedom.com. If you want to make coffee or beer donations, that would be awesome. You can do that at prisonorfreedom.com/donations. Okay, sharing is caring, guys. If you know other people that are trading and they're not sure how to use ATR correctly or how to set their stop losses without being shaken out, or how to measure volatility or do a price projection using ATR, you are welcome to share this video with them. And also, if learning about ATR has helped you increase your success with trading, please send me screenshots of your success. I'd love to share it with other people. And like always, guys, I always recommend that you become a real freedom fighter. Nowadays, the way that you become a freedom fighter is not to shoot somebody with a gun or stab somebody with a knife. It's through helping yourself become financially independent and helping others become financially independent through this Bitcoin technology that was created by Satoshi Nakamoto, that is taking power away from the 1% on Wall Street and giving it back to the 99% on Main Street, to the common people like us. So be a freedom fighter and share your knowledge of Bitcoin with other people, okay? It's better that if you're the person watching this video, it's better for new users and new people that are coming into the Bitcoin network to hear what Bitcoin is from you than it is for them to hear it from the knuckleheads and the numbnuts on CNBC or Bloomberg or one of those BS media channels where the people that talk about Bitcoin do not buy, sell, trade, or own any Bitcoins. Okay, so let's join this Bitcoin revolution, and I will. Thanks for watching this video, and I look forward to seeing you in a future currency analysis video. All right, have a great day, guys, and may the trading gods smile upon you when you are trading Bitcoin.